Well, hello, everybody. Thanks so much for being here today. My name is Natasha Phipps, and if you don't know who I am or who we are the Phipps Real Estate Group out of Calgary, Alberta with CIR Realty. We are an investor-focused real estate team. We're also real estate investors ourselves, and we do these events every month to just keep up to date with what's going on, update our investors what's going on in the Calgary market, what the market's doing, and also just what opportunities are out there. So tonight is no different, and we're going to be talking about keeping up with Calgary because it seems lately that's a different event every day. So we're going to do our best to get you updated here and prepared for whatever real estate investing you might be up to right now. So we are going to get started. Who's Kim? Can you mute whoever that is? Can you see who that is? Actually, I think I saw it, Kim. We're all good. So if you don't know our team, I'll just do a quick introduction. This is our beautiful team right here on the bottom right. From left, we have my assistant, Andrea, and Andrea Berg, and then Andrea Tessier beside her standing up. And then we have Kim sitting beside me, Alex. And I'm sure you've seen us all here before, but wanted to introduce us so that you're aware of who we all are. So what we're going to do tonight is we're going to talk about the current market conditions. But before that, I actually have something to slide in first. My good friend and mortgage broker, Ryan Bond, is here, and I asked him yesterday to come and give us an update. So he's here to give us a quick mortgage update, and then we'll jump into Calgary market conditions. Why is the market so hot? Where are the opportunities, and how can you kind of get involved in the Calgary market right now and think strategically at the same time? So that's what you can expect from this evening. We'll do questions at the end. So feel free to have those written down. We will deal with them at the end of the session. And then as usual, we will do a little Kahoot game at the end, and I have a very cool prize to give away tonight. So I'm excited. And if you're not following us, please do. Our Facebook group is really a great hub of information when we have an announcement, when we have events, when we have off-market opportunities or listings upcoming. And it's a great place to ask questions to other real estate investors as well. So if you're not on our Facebook group yet, we're just under 2,000 strong in there. And it's a really great resource. So if you have questions, pop them in there and see what other investors have to say. We also will chime in and kind of give you our thoughts as well. So join us there, Calgary Real Estate Investing Facebook group. That is my Instagram there, Natasha Phipps Realtor, and our website, phippsgroup.ca, where you can find information about us as a team, and also our property management services as well are on our website now too, which is very exciting. So without further delay, I'm going to get Ryan on here. Ryan is pressed for time. He is off to a very exciting hockey game. So I'm going to let him kind of take over and give us a brief overview. I'm going to just stop sharing this for a second here so I can see better. Where are you, Ryan? There you are. Ryan.
I think I just unmuted myself.
Oh,
can you hear me all right?
Yeah, and I'm just going to spotlight you as well so that we can all see you. There you are. Hi, Ryan. Thanks for being here.
Front and center. Thank you for having me again, Natasha. I really appreciate it. Yeah, as you mentioned, I do have to run out. It's for those that have kids in hockey, they know the schedules can be a little bit up in the air, and city finals are tonight, and my kid's the only goalie, so I have to show up.
You better show up.
Yeah, exactly. So yeah, I appreciate you having me here and just give you a quick update on what's going on in the mortgage world these days. A little bit of chaos out there for sure. With a lot of competing offers. We're seeing clients going in with no financing condition is the big one we've seen a few times. And, we really try and suggest people don't do that. It's very, very risky doing that unless you have a plan B. And that's one of the things I kind of wanted to just talk a little bit about today, is having that plan B and a little bit about what we're doing to mitigate the risk for people that need to go in with no financing condition for a purchase. I've always done this, especially for my investor clients, where we really take a look at, okay, what is the worst case scenario for buying this property, with 20% down? And that's when we look to the private lenders and go, is there a possible way that if for some reason we can't get a financing for this property, can we go to a B lender or a private lender and still secure financing, even if it's really, something temporary that we have to do? And so that's one thing that we'll take a look at on all properties. But there is a newer program out there that is actually allowing us to take the MLS, send it into the company, and pretty much within that day, they'll tell us whether they can go in with no conditions, and they'll back it up and they'll support it, and they will finance the property with a private lender. The fees are really reasonable. It's not something that you want to go into and stay in there for long term. It's basically, I want to get no peace of mind that I've got financing in place. So they'll take a quick look at it. They'll get back to us, say, yeah, go ahead, or that person's covered. In the meantime, we still present it to the regular lenders, the A banks, and if we don't need the private, we just cancel it. It's $500 fee. So that's something that we've been utilizing as well for people that are going in competing offers. They want to make it a little bit more attractive, hopefully to get the file accepted. So that's one of the things I want to touch on. Rates, as you've all seen and heard, they've gone up quite a bit over the last couple of months, probably almost 1% on the fixed rates. So we're now up over 3%, around 3.25, 3.3, depending if you're doing a 30-year amortization or a 25, which I always suggest doing a 30 on your investment properties. But 3.3, the variable is still very good, but again, there's a lot of talk about things moving around with the variable rates. Right now, we're still at or under 3% on the variable rates. So a lot of people are still taking that option and watching things as they go. And if they feel, they're too nervous about, let's say we see 3 rate hikes, at that point, they can just lock in their rate at any time with the variable. So seeing a little bit of that as well. And other than that, it's been quite busy. So yeah, a lot of people are looking to get in the market here.
That plan B kind of option is also good. It's not, like, I think people forget too, when you're in the heat of the moment and you're writing these offers, like, people go, well, I'm approved for this or pre-approved for this amount, kind of forgetting that the property also has to be appraised for that amount potentially, right? And so having this backup strategy, I think, is critical in place, and that is amazing to reduce your risk for, risking only $500 fee. That is pretty amazing. So make sure you guys are taking that into consideration for sure. And that's a 1-day turnaround, Ryan?
Yeah, one day turnaround. They'll get back to us pretty quick. You brought up a good point on the appraisals. We are seeing some offers come in that are over ask.
Yeah.
And there's some lenders that have just flat out declined them. So one of the things that we do as a company, we've got a great relationship with an appraisal team here in Calgary. I'll take that MLS listing and I'll send it over to her, and she'll get back to me pretty quick, usually within a day, whether that price will be accepted. So that's something else I do as well, is just trying to get as much info as possible so that we can make the process of getting that approval in place easier.
That is huge. That is huge right there. Yeah. That's amazing. That's really, really good service. Well, I think that's a pretty good update for now. I mean, it comes down to being prepared, right? Having all your ducks in a row as much as you possibly can before you're writing offers, which we talked about before with you many times. So I appreciate that. But thanks so much for those quick little updates. I know you got to run, but Ryan's always here for any of you guys. If you are looking for a fantastic investor focused mortgage broker, Ryan's your guy. So thanks so much for joining us, Ryan.
Yeah, thank you. And if anybody has any questions, you can just throw my email address up in the chat, and I'll get back to you as soon as I can.
Yeah, perfect.
Sorry, I'm missing everything else. I'll have to watch the recording.
That's okay. Thanks for joining us, Ryan.
Okay, thank you.
Take care. Good luck at the game.
Thank you.
So exciting. so exciting. Where are my hockey parents here? Is there other hockey parents? My husband is the head coach of my son's team this year. So it's been really, really cool to see actually them kind of have that bond this year. Okay, so I'm going to bring my slides back up. Well, was that helpful or what? I like those little tidbits of backup plans and what we can do to reduce our risk, because in times of pressure and stress, we can kind of forget to do that a little bit. So I think those are really good tips. Okay, let's bring our slides back up here. All right, so what I wanted to talk about briefly, so this data was from today, so it can't really get much more current, just to show you guys exactly what is going on. So this is the listings data for today, and then we'll look at the actual solds data to see what's happening. So the goal of tonight, I wanted to try to kind of show you guys what you can do and how you can use this data to try to find maybe a little bit softer spots in the market or opportunities where other people may not be looking, by using experience, what the Calgary market has done before. We know what the real estate cycle does and how it works. And the great thing about Calgary and Alberta is we have followed that like a textbook many times before. And this is very similar. So we can use, actual history to at least get a sense of what should happen here in the market. So this is a current snapshot of where we're sitting at today. Now, the most important number here is months of inventory, because that tells us what kind of market condition we're sitting at. And anything less than 2 months of inventory is a seller's market for sure. So across the board, we are in a seller's market condition now, which
Natasha,
yeah.
sorry, we can't see your slides.
Oh, thank you. Why didn't my share work? 1 second here. Thanks for letting me know that. I would have had no idea. Share screen. Let me know this works. Can you see it now?
Yeah.
Okay, good. Thank you. Yes, thank you. It's hard to see the chat, so thank you. All right, so what I wanted to point out here is this months of inventory. I get a lot of questions like, is the market actually this hot? Is this what's actually going on when you're talking to friends and family and other investors or whatnot? And this is really how you tell is what is the level of inventory in the market based on how quickly things are selling. So this tells us that yes, every single sector of the market right now is in a seller's market condition. And what we're going to talk about tonight is a little bit of what is the difference and where's the opportunity between these. And what you can see here for the apartment sector, it has the highest months of inventory. So, and for the apartment sector, this was the sector of the market that was the most oversaturated coming out of the recession. During the recession, the condo market got hit the hardest. So it's no surprise to me that this is the slowest to recover. And it's also, there's lots of volume. There's a lot of condos and apartments in Calgary. This is all of Calgary as a whole. It's not breaking it up, downtown versus suburbs, that kind of thing. We will talk about that as well. But this tells us right now that if you want to get into something where you're not competing as much, where you're having more choice and able to take your time a little bit more, looking at these numbers in any market will tell you where that might make sense. And the Calgary market, always in history, condos and really in a lot of markets will be the last to kind of adjust because there's so much volume there. So they swing, first either way, last either way, and the detached will kind of start to swing first and everything starts to trickle down. So that's what's happening on the listings side. Now, the sold data is really what's important in terms of property values and making your offer. What are things actually selling for? Because a list price doesn't really matter. It's the sold price that's really important, especially when we're talking about things like appraisals, like we were just talking about Ryan, and doing a comparative market analysis. We want to be using solds. You can look at actives to kind of get a comparison of the competition out there, but to determine property value and how quickly values are changing, you want to look at sold data. So right now for sold data, a couple important factors here. One is sold to list price ratio. This tells us that almost everything is going into competing offers, except for condos and townhouses. So condos and townhouses, no, that's not saying they can't be going into competing offers. This is just looking at the city as a whole. So the average sold to list price ratio for condos is 96.95%. Whereas, looking at the detached, sold to list price ratio is 101.6%. So that active price is not very accurate when you're trying to figure out what the place will actually sell for, but this at least gives us some data to consider. And we can drill down, we can look at a specific community and see what these numbers are doing, but in the interest of time, we're just looking at the city as a whole, because I want you to get familiar with these data points if you're not already. And then, of course, looking at prices year over year and what has happened. Now, historically, too, detached homes will appreciate at a higher rate than townhouses historically. This townhouse, this one actually surprised me. Whoops, sorry. The townhouses are higher. Sorry, they are close to the semi-detached, but not too far off. 14.03% for semi-detached. I know there's a lot of people own semi-detached properties in here as well as detached properties. So very similar, but this is kind of on trend with how history tells us the data will look. Detached houses will appreciate the most, and it'll go down usually average per year as you increase density, if that makes sense. So very in line with what we would expect to kind of happen here. But you can use this to try to figure out, if you don't want to be in the competing markets, then let's figure out where these holes might be. And if you do need to be in the competing markets, then these types of numbers will tell us on average how much you need to be shopping below your budget to make sure that you have room to be competitive with your offers. So what I want to talk about as well, I kind of touched on a little bit, is what does all this tell us? And I want to give a little kind of like backstory, because there's a lot of people here who are from Calgary, but not everyone is. And we talked about it a little bit in terms of condominiums, townhouses, and multifamily properties. So our downtown market is obviously where most of the density is. When you go out to the suburbs, that's where the least dense properties are. So detached houses, semi-detached, are more dense in the suburbs. Moving out of the recession in the last couple of years, the detached suburban market is what started to recover first from a rental standpoint for rents, and also vacancy rates, property values, everything started to recover first in the suburbs. And we can slowly see this approaching our downtown core. And this is not surprising. As prices go up in the more expensive detached categories, buyers, investors, tenants, they're going to have to start readjusting what they can afford from a rental standpoint and a purchase standpoint. So if they were maybe going to buy a house, now they're maybe buying a semi-detached, or a semi-detached, now they're having to go down to a townhouse, or a townhouse to a condo. So it all trickles down. And why, that's important to consider is if you're looking to buy this year, you may want to consider that and get ahead of that if that is important to you, that you are being strategic in this, which as investors, I imagine that it is. So, and that reverses the other way as well. When, times aren't as good, and when we went into a recession, that's exactly what happened as well. It'll reverse the other way. It'll hit multifamily stuff first and slowly kind of trickle out. So does anyone have any questions about that? Does that make sense? And oh, we can't see my slides, but that was from before. So what I get asked a lot as well is about, like, why is the market so hot here? What is going on? Why is this all happening? And there is an incredible amount of people moving here right now. The West has inspired and caused a huge influx of activity. This is from regular buyers and homeowners, tenants, and investors. And like, for example, we talk to investors several times a day, but every single day for sure, that are not in Alberta. And I've been doing that for going on 18 months now almost. So this is, there's a huge wave of people that are looking at Calgary right now. So real estate investors are looking for cash flow, they're looking for affordability, and also a big topic, of course, is landlord laws. And Alberta is very, very favorable. So we're seeing a lot of investors trying to take advantage of price points. They're trying to hit cash flow, and they also want more favorable landlord laws and less taxation, which is a really nice benefit to Alberta. And then the people who are moving here, it's very similar, but it's very centered around price point. So even though the numbers that we just looked at, we can see prices have risen quite a bit in the last year compared to where we were sitting, anywhere from 10 to 14% in attached to detached properties. That's quite a bit. However, if they're moving from Vancouver or Toronto, they may actually be able to just get in the market here at all, or buy something a lot more livable for their family or situation. So we have tenants that are applying to rent from us, that are already renting from us, that have moved here and relocated. They're setting up shop, and it's really exciting to see Calgary kind of hit its stride here, and so much good news and opportunity coming out of Calgary. So I'm absolutely here for it. It's a really exciting time for our city, and we have an incredible population here. So let's talk a little bit about Calgary, and a lot of you probably know this, but I did want to touch on it because it's important to understand why this is happening right now, and it comes down to economics. We could talk about economics for a whole straight hour here, and all the data points and the economic indicators that are important, and maybe we'll do that if that interests someone someday. But the most important website I like to use is Calgary Economic Development. Their reports and studies are so easy to read. They are really well done. And this is just a couple little snapshots. So opportunity is number one, whether you're a business, an individual, an investment, or an investor, or just just someone trying to get going. And the West is where it's at right now. So one very good example of that, of course, is the startup and tech sector here. So the startup ecosystem is valued at 2.7 billion and on track to grow by 1,000 new tech companies by 2030. So to me, that goes, okay, 1,000 new tech companies, how many people is that going to bring to our city, and how many places are these people going to need to rent, right? So we want to be thinking ahead and going, who's going to be renting from us in 5 years, and where might that be? And with the previous topic of talking about trying to get ahead of the market, this is what's going to push the investment into more multifamily condominium type of properties, because that's where the demand is going to be. And it's really, really exciting to see the revitalization kind of our downtown. If you've been listening to me speak for a few years, you have heard me warn people to stay away from the downtown for many years because vacancy was too high, prices were coming down, and there just wasn't the demand downtown and inner city. That is shifting now as we move through the real estate cycle, like I talked about. And this is just a couple very, small examples. But if you look into the really exciting companies that are making Calgary home, you will see that this is only going to kind of invigorate our downtown market, and it's starting to balance out the supply issue that we've had a problem with really since 2015. So long time coming, very exciting to see. And the other thing to consider is for downtown Calgary in particular, for like talking about condos, because we were so oversupplied, because there wasn't a need to be building a whole bunch of new towers, is that's going to all come down to the resale market. So if you want to be strategic and get ahead of things, I think this is a really great spot to do this. Downtown, inner city, I would even prefer more if I was going to be buying, a apartment style condos. I generally prefer low rise buildings. So I would try to stick near inner city more than downtown core for myself. That's my own personal interest, but I think this will apply 100%, and this is coming. Calgary also has the highest concentration of corporate head offices in Canada and the highest concentration of high-tech workers in Canada. So that, combined with our young population, livability and affordability, is what is attracting a lot of these companies here. And to top all of that off, we have plenty of office space. If you've been following the office space sector in Calgary for years here, we have plenty of office space, and there's some great deals to be had for these businesses looking to make Calgary home right now. So it's a really great option for a company getting going in the tech space or any other space. They can make a great deal on their office space and be able to tap into the young talent that Calgary has. So it's very exciting times. Let's see, Cheryl, are the increasing cost of insurance and condo fees concerned with downtown condos? So condo fees will always go up. That is not a debate. That is always going to be a debate, or not going to be a debate. Yes, with condos, you need to be even more strategic, that you're, number one, buying in a building that you're doing your homework on. Make sure you're getting the condo documents reviewed, make sure that they're in a healthy position. And there definitely is some buildings you want to avoid, that you can usually tell if the condo fees seem extraordinarily high. That's the first red flag, that there's probably something wrong with the reserve fund or something else in the project. Also, make sure you're comparing apples to apples, because not all condo building fees include the same things. And so you kind of have to get specific with what's included. But generally speaking, I find low-rise buildings with less amenities, try to avoid the pools and the hot tubs and the, 6 elevators and all those items, because that's just what drives fees up. So low-rise, when you look at the buildings, and compare them to the high-rise buildings almost always have higher fees. So something to keep in mind. The other thing, in thinking about condos, is people ask a lot about Airbnbs. And this is an area that I think is extremely risky. Airbnbs are great when they work, but you need to have a backup plan, because those rules can change at any time. Legislation can change at any time in our city or any city. You can buy into a building now that says they allow, Airbnbs, and next year they could say too bad, or next year they could go, okay, you can do an Airbnb for a, $500 turnover fee every single time. Like, they're just pricing you out of the ability to do it. And this has happened here in Calgary. So condos, always have that backup plan. Insurance is a great point to make about condominiums, and we will get someone to come speak to us about insurance soon. But you do need to have a secondary insurance for the deductibles that could go along with a condominium building. So your insurance costs will be higher. The deductibles that are out there and on these policies in these condominium projects can be extremely high. Like, we're talking $50,000 to $100,000 for a deductible when, say something, your unit floods, or there's some sort of, larger event that happens. So you need insurance for your insurance, which sounds crazy, but you do. So if you're buying a condo, make sure you're finding out what the actual policy is of the building for the deductible that you would be responsible for should something happen in your unit. And if that number is obscene or something you absolutely would not be able to afford, they can give you a secondary policy which will cover you for that. So again, it's all about homework and numbers and making sure this, obviously works with you and aligns with your goals. But really good question, Cheryl. Okay. So we talked a little bit, obviously, about the higher density, property types and where the demand is. So right now, like, the highest demand is absolutely in houses. I'm just gonna make sure yeah, okay. I want to make sure I wasn't jumping over something. So if you wanted to buy a house right now, I kind of just want to talk about a couple of things you could do. One is, we were talking right before this, the team had some good ideas. Finding what isn't selling is a great way to, be a real estate investor and make your opportunity out of someone, else's maybe struggle or what's steering other people away. So we can shop for things that have been on the market, longer than X amount of days. We can search that for you. And in the houses kind of sector, that might be a really strategic way to go about it. Dana, I believe it was on my team right before, mentioned also the inventory levels change a lot every day. And that's because most people list houses on Thursdays and, hope for showings over the weekend and offer presentations on Sundays. So if you're out shopping on a Tuesday or Wednesday and that property is either still there or has, not sold for some reason, that can indicate to you that, okay, you might not get into as crazy of a competing offer scenario. So day of the week is important, as well as even, holidays, and even the middle of summer can be a great time because more people are distracted out enjoying summertime fun activities. I find investors to be sleepiest in the summer because they're, enjoying the fruits of their labor. So for those more eager investors, waiting until summertime could be a strategic move as well. And then what we're seeing now is kind of that trickle down effect. So into townhouses, Dana, I think she just turned her camera, so she's not here, but I think she just listed a townhouse. And, if we were rewinding maybe 3 or 4 months, townhouses weren't flying off the shelves the way detached houses were. And now we're starting to see that in townhouses where prices are going well over list. We're seeing, a parade of people going through and really, really high activity. So as you kind of go down here, you will see condos will have the least activity. So depending what you're buying for or what you're doing, you can kind of keep that in mind. Also for condo fees, that applies to townhouses as well. The notes about insurance and doing your homework, of course. So I was going to show you, I'm just going to pull up this is a big document I want to show you, and kind of how do you look inner city versus suburbs? How do I take advantage of where there is maybe not quite as much activity? And you can see the difference when you look in communities that are, further out in the suburbs versus inner city or downtown. And it's really, really interesting. So I'm going to show you guys a document here. And if anyone wants this is just all put out by the Calgary Real Estate Board. So this is information that we can actually absolutely share. So I'm going to share my screen here again in a moment and show you how I would be thinking strategically about this right now. Okay. So this, and I realize this might be a little hard to see because it's, there's a lot of numbers here and you don't need to read through all this, but the point I wanted to make was we can look at the whole city in different sectors. So detached, and if you say you really need or want to get into the detached sector, okay, well, let's start here and look where has the highest months of supply so that if you're buying, you can have the, hopefully best time of it. And if you're selling, then also, if you have lower months of supply, then, well, that's really, really great for you, of course. And so this is a way to kind of determine where might make sense to look. So this was the main thing I wanted to tell you about. So detached homes, there's obviously not a lot of detached homes in the city center, but there are some, and they have the highest months of supply in here. Looking at apartment style condos, which we were just talking about, city center apartment style condos still has 4.39 months of inventory. So that is a substantial difference than if we're looking in the Northeast here for condos, right? So this is how you can get more specific in your searches. Same thing with the South zone. There's over 3 months of supply here. And we can do the same thing, obviously, for all the sectors. So row homes, where we were talking about kind of, that's kind of starting to pop off now in terms of desirability and offers. We can be have a little bit different expectations if we're searching, with something with less than 1 month of supply versus, something in the east zone that has 2.5 months of supply. So this data is available to us all the time. We can use this to try to maximize either you as a seller or as a buyer to try to find these little gaps in the market. And then combining that, of course, with time of week even and days and what that looks like is a really great way to go about it. I think that the team this weekend was working super hard, and we were able to sneak in and get several of our buyers under contract, which seemed like the showings were a little bit slower out there because it was a long weekend. Maybe more people were, on holiday or whatever. And we were able to kind of sneak in when maybe people were kind of looking the other way here, just by being strategic with our timing. So I really like this chart. It just gives you a really great snapshot of whatever it is that you're looking at, and can be like analyzed, month over month, of course, as well. So any questions about that? I can't see my chat right now. Sorry. Does that make sense to everyone? Is that helpful? Or did I lost my
Awesome,
chat?
Natasha.
Okay. And then there's one more. Actually, no, that's probably good. I think that one will be too hard to kind of show. The other kind of charts, if you're interested, we can send you these reports, is looking at the months of supply graphs, and pricing, of course, is always interesting to watch. The only other thing I'll show you is this particular one, which shows us based on just the whole city as, now this is total residential, so this is including everything, what prices are doing where. So as you can see, in the Northwest, benchmark prices are up 13.2%, whereas city center is 5% and the East is 8%. So this will tell you a little bit too what to expect where. And I just continue this number in the inner city and city center to continue to climb, because demand is going to just start squeezing the inner city and core, like we talked about. Hard to say how long that will take. I do think it will, begin this year. But I mean, things keep moving faster than I probably anticipate them to, but we do know, I feel very confident that this is absolutely going to catch up. So do that what you will with that. But I know for myself as an investor, this year has been the first year where I've actually been interested and excited to look at opportunities inner city from the multifamily space, purely because of vacancy rates as well have come down, and rents are starting to move in the right direction there. So yeah, it's exciting to see our downtown revitalization here happening. Okay, let me just get my slides back up here. So we're going to talk just about a few other ideas that I have to kind of find some holes in the market, some ideas. So thinking about a higher price point. So we've seen lots of examples as a listing agent and as a buyer, as a buying agent, where just moving up even 25 to 50,000 from your budget will actually be worth it to you, because you'll end up paying even less or have less competition. So just like a quick example, I was like, how quick would it take me to find? I found many right away. So looking at Tuscany, there was a house that just sold. It was listed at 549, 217 Tuscany Way or something. It sold for 50,000 over ask price. So 10% markup over asking price. Whereas you jumped up for those buyers who are maybe getting out of that home and jumping up, they're only seeing potentially 2 to 5% over asking price. So and if you're right on the border between two kind of price differences by 25 to 50,000, then it could make more sense to try to bump that up a little bit, so that you have a little bit more time, and you can still maybe have conditions instead of having to do no conditions. It can relieve some of the pressure if you're either not competing at all, or just up against, say, 1 or 2 other offers, which we experienced this weekend with a few of our buyers. So give that some thought. Obviously, make sure you can afford to jump up that price point. And if you cannot, and you're going to stay in the, the most competitive price point for whatever sector that is, then just make sure you're shopping below your pre-approval price so you have room to go above list price. So that's what I mean by comparing the sales and the price ranges, is what's specifically happening in each one for that community. And it is different community to community and asset type to asset type. You cannot kind of, brush the whole city in one way right now. Some of it makes no sense whatsoever to me. Why some people are paying so high for some things, and then other things which seem priced decently well are not going. So data is only as good as it is, but it is good to understand what's happening in whatever community you're looking at as much as possible. We talked about sale price to list price ratios. This is so important in order to be setting expectations. If you are writing an offer on a property that we as your realtors know you absolutely will not get, the only thing that you're doing is help to drive up prices. Because if you're putting in several offers that we know for sure you're not going to get, because they just use your offer to get other offers. So it's actually not going to help you in the long run, or help to try to kind of control this a little bit. Look for opportunities in the data, like we talked about. This is really really important one. And us as investor focused realtors, this is what we're always looking at and trying to find these holes in the data either way, and through every market type. It's really, really important. The other thing is, you could, like I mentioned earlier, is look at listings that have been sitting for more than X amount of days. And there are listings that are not selling. It's not like every single listing is flying off the shelves right now. So that could mean it needs some work. It's a fixer-upper that's maybe hard to finance. It could be an opportunity, or a hoarder house or something, right? It could be an opportunity for you as a real estate investor to take advantage of whatever the reason that is not selling and make some money on the buy, because we're in a fast appreciating market. So those are all little tips, and we can search based on days on market for sure on any listings. And the other thing you're seeing right now, which I want to talk about quickly, was for sale by owners. And you would think that might mean that you will get a better deal. But I have had a few people send me recent, oh, check this out. Like, this is a for sale by owner in this community. And they're literally just picking a number out of a hat. And often it's extremely high. And if they were listing it, probably not would be recommended. And so just because it's a for sale by owner, be careful. That doesn't necessarily mean that it is a great deal. It means that they are, wanting to try to jump over some steps, and they do not understand, in my opinion, the value of having a realtor represent them for legal reasons as well. There's things being marketed and advertised that could get them in hot water. So just be careful in that space. Always make sure that you're looking at the actual data. And just because it's a for sale by owner does not mean it's a good deal. So that brings us to this exciting topic, which is bully offers. It's another hole in the market. And what we're looking at every day as realtors right now is what is coming back to market that was previously sold or pending. And a bully offer is a very aggressive offer that basically cannot be ignored for whatever reason. I'm not sure why my slides just stopped. It cannot be ignored for whatever reason. And like a good example of that is, you'll see on these listings, we're going to do showings Friday to Sunday. We're going to review offers Sunday evening. Next thing you know, Saturday morning, the house report sold, and everyone's upset, and everyone gets very hurt and frustrated. And that means that the seller received an offer that they could not refuse, that they could not tell them to wait. And the bully offer put an offer in that was a very short timeline, often no conditions. And again, just really hard to refuse. So why do these things not work out? And there is a risk to accepting a bully offer and also to putting one in. And not usually, but often when these come back, there's a few reasons. And this could be an opportunity for you as a buyer. So if it comes back and it was previously sold and it came right back to market, possibly the deposit wasn't actually put in. So if offers are written on a Saturday, deposit's not getting delivered until Monday, Tuesday, maybe even. So if that deposit never shows up at the listing brokerage, then that house is not sold. And I do not recommend that. That puts you in a breach of contract. That is absolutely not what you want to be doing. You are breaching a contract which you have signed, but people still do it. And then, it's like, well, do you want to, sue? Do you want to go down that road? And often people don't. They just put it back up on the market. And so that's why you'll see these things come back. Or they, maybe didn't even view the house and they're just tying up properties to give them time to think about it. So they can put the contract in and maybe they talked to their broker in between Saturday and Monday and realized they couldn't qualify. Whatever reason, they've changed their mind. So that could be an opportunity when you see something come back, relisted. Generally speaking, you don't get the same, hurrah like you did the first time to the market. you can't necessarily repeat that unless they take it off for extended period of time and bring it back later. So that's why you'll see these things come off and on, and it is happening a lot. The other risk to a bully offer I wanted to talk about is, and I literally had a realtor tell me this yesterday, that if that bully offer was accepted and they gave me a deposit of whatever, $10,000, we accepted it, say it looked like it was going through, we got the deposit. If they cannot close because they don't have financing, because they got carried away, they had fear of missing out, they jumped on this bandwagon and went all chips in, you are potentially in trouble as well as the seller, because say you've already bought another property and you need the proceeds for this property to sell. So a bully offer, oftentimes I will ask, do you have a letter of approval? Do you have something to show me that that these people can actually close? And I've had people tell me, oh, they're not even pre-approved and they're putting in bully offers. So just because it's on paper and just because someone signed it, that does not mean that there's not risks for you on the other side of that. I sure hope none of our investors are putting in offers like that we know that you don't have a backup plan for, like Ryan was talking about. Always, always, always have that plan B if you're going to go unconditional, and make sure you can live with that plan B as well. Make sure you're okay. You will figure it out and get through that time. So that's kind of what I want to say about bully offers, because people I think don't understand the risks necessarily when they get into the excitement. And then the last piece actually is, when Ryan and I talked about that a little bit, is what if it doesn't appraise? And just because they put in cash offer does not mean that they're not going to put a mortgage on it. And so they, if they can't appraise and they only have $10,000 on the table, then they could just walk away. So deposits are very, very important in this type of market. Try to get, if you're the seller, try to get more than you get as much as you can. Basically, if you're a buyer and you're a serious buyer and you're organized and prepared, put a decent deposit down, because if I'm on the other side as a listing agent, that will put weight when I'm talking to the homeowners about your offer. If you're putting a very small deposit and very aggressive, that actually is a red flag for me, and I would be pointing out the risks to my clients. So that's my rant on bully offers. Hopefully that is a little bit helpful. And what do we have next? Oh, foreclosures. Foreclosures in Canada are not as fun as we would like. I think so often when we're researching investment strategies and we're on these cool podcasts and even reading lots of books, foreclosures obviously are a tactic that comes up often, because the hope is you're going to get an undervalued property, and in a hot market, that's what we're all trying to do as buyers is pay less, right? And to take advantage of a good price in a hot market. Foreclosures are not always a good deal here in Canada. The banks want as much money as possible. They are not just trying to, get it off their books as quickly as possible. They will literally be patient. They will take their time. They want to get the best price as possible. And the risks for the buyer or the investor are pretty substantial, and you need to be aware of them. So the risks are, number one is the bank doesn't need to disclose to you any defects whatsoever. So bed bugs, structural issues, mice, whatever happened in the house, if there was crime, if there was they do not need to disclose anything to you. So you could be buying a property that has things wrong with it that you don't, know till later. And then you're also not guaranteed the condition of the property at closing time. So if you're renovating or tearing it down or whatever, that may not matter to you. But if, say something happens in between now and closing day that, like all the appliances disappear or all the light fixtures are gone on closing day, that's too bad. That's just the way it is. So they make sense if you get them for a decent price, if you have, the cash to be able to take care of these problems should they come up. Now, does that happen all the time? No. But can it happen? Yes, absolutely. And you have no recourse. You have signed all that away when you sign a contract on a foreclosure. So just be aware of that. And I think a lot of people were waiting for this huge wave of foreclosures to hit the market after COVID, and all the money our government was handing out, and people were I think thinking there would be massive floods of foreclosures to the market, and we just haven't seen that. And the foreclosures that are on the market, they just haven't been necessarily smoking deals, but there are some good ones. I know Kim has looking at a couple recently that have been pretty good, but just because it's foreclosure does not mean it's a good deal necessarily. So that's the main message I want to get across there. Okay, before we get to the Kahoot, does anyone have questions, comments, anything to add? Where's my chat? And feel free to, you can turn your camera on if you do have a question. I hope this has been helpful. Does anyone have any comments, questions, concerns? Nothing. Wow, you guys are so quiet tonight. What is going on? Everyone is tired. Okay, well, if you've been to our events before, you know that at the end, soaking it all in, good. After a long weekend, yeah, maybe there's some long hangovers still happening, maybe too much wine. What we usually do at the end of me talking, usually too much because I get excited, is we do a little game at the end, and we have a prize, and we have a fun prize tonight. So I'm excited about that. So we're gonna get to that in a second. But if anyone does want to share anything, or they're, or even if they're working on something that you want my opinion on, or the team's opinion, Kim and I are also doing property management now. So if you have any property management questions, we can talk about that. But I hope this was.
Hi, Natasha.
Yes, who's that?
I'm AJ from Vancouver. We met at Aspire a couple of years ago.
Yes.
Looking for any pre-sale deals on duplex or detached homes in any of the community in Calgary.
Yeah, let's talk about that. So pre-sale, pre-construction is anything that is, not built yet, that you are looking to buy now and take possession of later. So this has been a very, very popular strategy here in Calgary for several years. Right now, so how it works with our builders is we're given usually a block of lots at a time, 10 to 20, usually we're giving at a time, then we sell those, and then we're waiting again until we get some more. So right now we're literally at the point, I think, where we have one left of our legally suited semi-detached properties we could send you, Eugene. And then, but we will get more as time goes on, I'm assuming. The wait time for new construction right now on those types of properties is, 2 to 2.5 years right now. That's how backed up the new construction space is, and how much activity there has been on the sales market. So, even talking to other clients who've gone to other builders, or my builder contacts, these builders literally have lists of hundreds of people wanting to buy. So there is definitely a shortage, but if that's what you're looking for, we can put you on the list. We can share what we have right now with you, and then we just let you know as soon as we get it. And we do get exclusive access, like our lots that we get are just ours, which is nice because then we're not competing with anyone else, and the price is the price. And on those, we also do have or we have had, at least on the current lots, the main thing about new construction is it can change within one day. So we even had rental assurance incentives on those for 3 years. So those are pretty good deals, and we can certainly send you those. If you want, Eugene, I can, Dre, can you maybe message him just to make sure we have obviously we do have your contact, but we'll just message you with my assistant's phone number, and then she can make sure to get you the info after. And those are starting at $650,000 for a legally suited semi-detached right now with double garage. And the only area we have land right at this minute is in a community called Huxley, Belvedere at Huxley, which is on the east side of the city. We will get more as the year goes on. The problem every builder is having right now is it's not necessarily the builders, it's the land developers who they just took a holiday, I think, when COVID began and stopped developing land, and realtors and builders and buyers really were just going crazy. And so all the builders are literally waiting for land right now to be released from the land developers so that they can continue selling and building. So it's a really interesting time. There should be more lots though released in a few different communities moving into the spring here. So there'll be a little bit more selection, but prices, I do expect prices to continue to go up. I don't expect, there to be a benefit to waiting on these types of properties, till summer, let's say, or really at all. Like, I just can't imagine that changing anytime soon with the rising cost of construction and the incredible demand and growth that we're seeing here. So
Actually, I'm happy with a more delay time, because as much as the time will be delayed,
yeah,
appreciation in Calgary will be higher.
Exactly.
So everybody needs to understand this.
Yeah, yes, but that only makes sense when you're getting good appreciation, right? Which I do expect us to see here in the next kind of couple of years still. So I think it's still a great purchase for sure.
And Natasha,
Yeah.
while we have everyone's attention with an opportunity, if I speak of our new listing today, it's a really good turnkey investor property. It's currently rented out as a 7-bedroom rooming house. So there's 7 tenants on 7 different leases. It is a legally suited property, so it has the opportunity to also convert back into up-down living. We just listed that on MLS today for $485,000. And it's in Huntington Hills. For anyone who doesn't live in Calgary, that's in the northeast sort of quadrant, but right above city center, inner city. Really good access to the Deerfoot, which is a main highway that a lot of people use to get to work. And there's lots of amenities around the property as well. The garage is also rented, so it's 7 bedrooms plus the garage. The total rent for that one is $4,000, and our seller is cash flowing over $1,000 a month on that property. So if you want that information, I have it all in a Google Drive, and I feel like it would just be the best way for me to send my email. And if you're interested, email me and I will send you the Google Drive. But yeah, we just listed that today. There's lots of interest already, but we want to share that.
It's like 485 listed price?
485.
Okay. And
it is legally
suited.
suited.
It's like very high cash flow actually. The mortgage should be around only 2,000 maybe.
Yeah, I have the performa as well, that in the Google Drive, so I'll send you that. And it is currently all rented on lease agreements. And the seller has actually found a property management company that would take on this property if you're not in Calgary.
Yeah. So this is a rooming house, so 7 different leases on here. And yeah, I mean, this is the way to maximize cash flow. If you want, the goal with the property is to get as much cash flow as possible, this is how you do it for sure. Obviously a little bit more work than just putting in 1 tenant for 12 months, but it pays off like for sure. And I love that this one has the legal suite, like Dana said. So, you could convert it back to a long-term rental at any time and have 2 tenants in there. plus a garage to rent. So absolutely.
Hi,
Yeah.
Natasha.
Yeah.
How much property management fee you guys charges, or how does it varies between, say, kind of detached, semi-detached, or if it's like a sixplex or so?
So for multi-unit properties like a fourplex or up, we would charge 8% of rents. And for just residential, it would be 10%. And then that would be for ongoing management. And then we would have Kim, I don't know, maybe you want to talk on property management services, but we would have our sign-on fee as well, right, Kim?
Yeah, of course. Yeah, there's a sign-on fee when we get started, based on per unit. It doesn't fluctuate a whole lot, but it's just a one-time sign-on fee and then renewal every year based on the leases.
Yeah.
Okay, thank you.
Yeah. Yeah, we're excited. We just are kind of getting going with our property management team that we announced recently. We've got our first kind of dozen properties signed on. So yeah, we're really excited to get going with that. On our website, we do have some information about property management as well. You can check out, there's a brochure on there you can download, or just reach out to Kim or I anytime and we can point you in the right direction. Oh yeah, Kim, can you type in the property management email address in the chat, please? That would be wonderful. Okay, Eugene asked, do you recommend investing in condo only in the suburbs at the moment? What do you think the passive appreciation would be? If I was going to be buying a condo right now, I would try to get ahead of things. So I would be looking inner city. That would be, I wouldn't go right downtown to the towers. Like I don't love high rises to begin with. But I would be looking inner city, in some of these smaller projects, because why not try to get ahead of things? Now, you need to understand, if you're going to be buying condos right now, the rental rates are just kind of starting to increase. So as we talked about earlier, rents in the suburbs have been going up now for several consecutive years, year over year, but that hasn't been the case inner city and downtown. So but me, I like to try to get ahead of things and be strategic. So I would be looking closer to inner city right now, if it was me. But there is great condos out in these suburbs as well, in low rise, like 4-story projects that you could consider as well. But I personally, that's probably what I would do. And actually, my husband and I were even talking about maybe we should be looking this year for our kids, because they're 8 and 10. And I was thinking, how are they going to possibly afford to buy something in 10 years? And I want to be out traveling more then. So I'm going to try to get the plan to get them out of the nest here sooner. That's what we were thinking. So
Natasha, how motivated the city of Calgary is about subdivision? Like if I can buy any older, bigger lots, old houses with a 7,000 square feet lot, and I do subdivision and make 2 single family homes or duplex. The city of Calgary is motivated in these projects?
Yeah, I actually know this process well. My husband and I were actually infill builders for several years right before the recession hit. So from 2012 to 15, we built many of these infills, and the city's pretty good to work with, and they're even better now than they were then. So there are restrictions, of course, on the density and lot sizes and all that stuff, but certainly I think now is the time to start looking at that again. The people who kind of were stubborn and kept trying to build infills from 2015 to 2020, I don't know how they survived, honestly. There was the market just wasn't there to support the sales side. So we're in an arena now where I would feel comfortable to suggest that as a strategy again. Absolutely. High River condo market. I personally, has anyone on the team been looking into the High River condo market recently? It's something you might have to look up for you, Cheryl.
Not the condo market, but I was just looking at, we had sold an investment property to a client last summer, and I was just looking for her. She asked about the appreciation, and it's already gone up about 3% from when she bought last year.
Awesome. That's
Yeah.
great. Actually, that reminded me, I didn't quite answer Eugene's question about appreciation. So I'm a super conservative kind of a person, and when it comes to my numbers, so I would even if I feel an area would appreciate, 8 to 10%, I would never put that on a pro forma, because I need to know that I can live with this investment if it doesn't do that. Because no matter what, appreciation is always speculative. As we've seen, things can happen in the world, things can change all of a sudden, and we may not get that like we're hoping. So don't only ever buy for appreciation, in my opinion. Always have other reasons to be buying. And your number one return on investment typically is your mortgage pay down. So yes, appreciation is important. And, like realistically, I do think we will see these 8-10% numbers start reaching these condo types in the next, especially inner city, in the next year or so. But looking at a pro forma, I would still remain conservative and probably put 3% on there, would be my 2 cents on that. And if I don't like those numbers, or that doesn't work for me, then maybe that's not the right strategy for me. Anthony said, Airdrie, Oaktook, some of the older communities around town seem to perform really well with rent versus purchase price. Absolutely, Anthony, that's a really good point. Even as far as Carstairs, actually, and all the surrounding areas, I think the rental market will remain strong there. Kim, would you expect that? I kind of think people will still continue to push out to kind of get more for their money, just like homeowners are on the rental side.
Natasha, would you talk about some of the areas outside Calgary? Like sometimes we hear about Red Deer, Airdrie, yes, Okotoks, as Anthony mentioned. So what are the few areas and which ones? Yeah, if you got few tips, please.
Yeah, so historically, Calgary market is what appreciates first, or not appreciates, depreciates, it does whatever first, and then it starts to trickle out. So right now it's extremely competitive in like Cochrane and Airdrie and these surrounding areas. Red Deer, though, is a very interesting one, and something I've actually been researching, because Red Deer isn't as nowhere near like Calgary is right now. But history does tell us that everything starts to go up the highway, I think is what Kim always says. It goes up the highway to Edmonton, right? So I would expect the Red Deer market to start to follow suit with us in the next couple of years. And yes, prices are a lot lower. I even have been speaking with a builder there about some turnkey like attached homes that look like really great rental options. So I think it's definitely worth considering. I haven't done quite enough research yet to say, yes, absolutely, we should be buying in Red Deer. But for a person who doesn't want a condo and needs to get under a certain price point because if that's what you can afford, then that could make a lot of really good sense to look into these kind of smaller surrounding areas like Red Deer to make your money go further for you. Yeah. Be careful in the really smaller towns about property management. If you're not here, it can get much more difficult when you're in little towns to manage properties, get tradespeople out, that kind of thing. So that's the only thing to be aware of if you're not the one on the ground doing it.
Exactly. Good point.
Yeah. Okay. Well, if that's everyone's questions, then thanks for being here. If we can help you at all, please let us know. We are here to help and answer any questions you might have. So the best way to get started with us, if you're a new client, we like to have kind of a one-on-one initial strategy session where we sit down and learn about you and your goals and see how we can help you. So if that's interesting to you, let us know. And this will be recorded as well. If you want to share it with anyone, I would appreciate that very much. Have a good night, everybody.